Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, August 9th through Friday, August 13th, 2010. Well, folks, the first thing I want to do is look at the daily chart. We're going to cover what happened last week briefly and then go into what we expect. What are the key levels? What are the technicals telling us? And again, for those of you that follow InTheMoneyStocks.com, you know we ignore the stochastics, the MACD, the RSI. That's nonsense. That's BS. What we look at is price pattern and time. Now, why is that other stuff BS? Because everyone uses it. When everyone uses it, it doesn't work nearly as well. And that's the bottom line, folks. If you look at the psychology of the market, you have to understand that when everyone is looking for something in one direction, it's probably going to go the opposite way. And that's the same thing that happens with technical analysis. When everyone uses, let's say, the MACD or something like that, and they say, oh, look at this, it's probably not going to work. And again, all those are lagging indicators. What you need is a good price pattern and time recognition along with pivot and turn dates that we reveal in that research center and in the intraday stock chat to master the markets and profit like we have been profiting. 2010 has been a year of the ages here at InTheMoneyStocks.com as we continue to knock it out of the park. Every week, profits galore. That's the bottom line. All right, folks? Now, what are you seeing here? Again, remember on Friday, if you look back, we had the jobs number. The jobs number coming in a little bit worse than expected. The market's dumped out. You can see it here on the daily. This is the daily chart or the candle for last Friday. And look at that dump out. You started right here on the 200 moving average, and this is the 200 moving average stretching all the way back. You dumped out and sold all the way down to that green trend line, at which point you reversed. Now, this green trend line was a master level that I gave to our members, specifically our members, over the last 2 weeks. I said, guys, that level is a master level, and what you're going to look for is if it breaks and closes below, the markets will sell off. If it doesn't, the markets will bounce. And sure enough, as you came down into it, not only in the intraday stock chat did I buy it there, but again, we can see how the market bounced off that level and retraced, getting back above the 200 by the close and closing all the way up here. Now, what does that tell us? Well, it tells us still to be in a slightly neutral to upside bias. Now, I'm close to being in a full-out neutral bias for next week, but overall, you have to say the markets, as long as you're staying here above that trend line, the markets could have a little bit more upside to go. As soon as you get below that trend line, it's all off the table. But either way, tremendous day on Friday. The jobs number coming in worse than expected. And again, overall, I think the recovery, you have to look at the Friday effect. What is the Friday effect? Well, think about this. The powers that be, and remember, this market, we have to remember, the market is not just a market. It's not just buyers and sellers. There's other entities in there, other forces in there. And again, as I flip to the intraday, I want to show you the intraday, and you can see the reversal here. But basically, the market is made up of buyers and sellers and institutions and the plunge protection team or the bigger institutions that control the markets. And remember, when you're looking at the market from an outside view, you have to say to yourself, okay, the Fridays in August lead into the weekends in August. August weekends are notorious for people taking vacations with their family. Remember, kids are off from school. They're going to be going back in September to school. So there's a lot of people that are going to be taking vacations. They're going to be driving around the country. They're going to be spending money. And that's the key, spending money. What does that mean? Well, let me ask you this question. If the markets were down 300 on Friday and the family was going on vacation, do you think that that family would be as likely to spend as much money going over the course of that weekend on that vacation as they might have been if the markets were flat or positive? And of course, the answer is no. Of course, if they hear a bad jobs number and the market dumped out 3% on Friday, they're probably not spending that much money, as opposed to how the markets ended, which was basically flat to slightly lower on Friday off of this master reversal late in the day, which was a beautiful little start pattern off of this key trend line. We'll discuss this key trend line, which is the same one on the daily. And then again, the squeeze up, short started to cover. They had to cover. Once it started, it was a snowball effect and just rallied all the way up, almost ending at the highs of the day. And here's the highs of the day early in the day, and this is where we ended. Now, again, that's the key to understand that Friday effect. Every Friday when the volume is light and people are most likely taking vacations, you have to assume the market won't sell hard. And even if it does, expect it to reverse, especially when you hit the key levels. Now, notice this. See this trend line right here? Take a look at the pivot high from Friday early in the day. Connect the lows from Thursday and right there, and look at the reversal off of that. And again, notice the 1, 2, 3 bar surge. This is key methodology points in themoneystocks.com. Key teaches to everyone in the research center, everyone in the intraday stock chat, and of course our methodology revealed webinar goes in depth into some keys that we don't even discuss in that stuff. That's so much more in depth. You can read up about it on our website. Go to each individual page of the research center. It gives you a good outline of what we cover. But in any case, check that out. Beautiful reversal there, coming all the way down. You come right to this yellow trend line and this white trend line. Now, right here at 1095, 110.95 on the SPY. By the way, the SPY low on Friday was 110.92, so I gave the alert to buy at 110.95, and again, that was 3 cents off the exact lows of the day, and look at the market the rest of the day. Beautiful little reversal. You had to like this 1, 2, 3 bar surge to the upside, consolidation up again, and look at the yellow line. Now, what is this yellow line? Why is this yellow line so significant? Because this yellow line is the exact line right here, just in different colors. The green line on this daily chart is the exact same line as the yellow line here. Why, or how do you know that? Well, let's scan out. Check this out. I love charts like this because we can do this. There it is. So essentially, as if you were looking at the daily chart, this is the same line connecting from the pivot low at 101 and all the way down. In fact, it goes all the way back. Check that out, guys. Going all the way back to 101. Look at how that line connects through all the lows. You came right there, and that was your buying opportunity on Friday. And again, if this line had broken, we expect more downside. And then again, 60-minute, here you can see it on the 60-minute. Beautiful chart. Look at the connecting. Boom, 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 all the way up. And the market comes right down there. We buy. Market goes up. And again, it's key to have these alerts. I put this on. Believe it or not, there's a hot chart and alert that was put out. And remember, we do hot chart and alert live stuff. So when it goes out, we send out the alert, text message, or email alert. So you know it's out there. You jump into that hot charts and alerts. You view the chart, and you can make your own decision whether or not to buy, sell, whatever we're telling you to do or advising you on. You can do that. And again, right here at this point, we put out a hot chart and alert on there saying, guys, this is a master level. Look for a bounce. And sure enough, it bounces up. And again, we said if it broke, then you start to look for massive downside. But this is the same line. This line's on the 60-minute chart. Here's the intraday. And again, I had to zoom out big time on that. And the daily, same line. And it's just that key of a line that continues to tell us that as long as we're above that, neutral to upside, or if you get below that, beware, you could really dump out big time on the markets. All right, now let's go to the intraday again, zoom in. I want to see if there's anything else I want to cover. If we go back for the full amount of the week, this is the week. And really the interesting thing about last week, I thought, was that the volume was very light for the first 4 days, and then Friday you had the jobs number, which everyone was looking forward to, and that again sold and then rallied back. But look at this. So Monday, choppy. Tuesday, choppy. Wednesday, choppy. Thursday, choppy. Friday, you dipped. But by the end of the day, you really came right back into that center line. If you draw a line between the highs and the lows of Monday through Thursday, you basically closed right in there. And again, that's a key recapture. Also, the fact we recaptured the 200 on the intraday chart. And if you go to the daily chart, you recaptured the 200 as well. Plus, you bounced off this trend line. That again tells us that the market is still in a mode of not knowing whether or not it wants to break down yet and still may go a little bit higher. So again, just watch that pivot line. I mean, that's what it all comes down to next week. Just keep an eye on it, and that's the bottom line. All right, again, technically speaking, the markets are slightly overbought. Yes, they are, but that doesn't mean that they're ready to fall down. Remember, markets are notorious for staying overbought or oversold for long periods, and again, amateurs get whipsawed. We're here to make sure that whipsaw doesn't happen. We're going to give you the turn dates. We're going to give you the key pivots. We're going to give you the trend lines to watch for bounces and tell you in the hot charts and alerts to go long or short. Whether or not we're doing that, we're going to give you the exact trades. I give my exact swing trades in that hot charts and alerts. That's included in the whole entire research center, by the way. Pretty sick stuff. In addition, if you're in the intraday stock chat, we're scalping all day long. If the scalps are there, we're taking them. We're taking the 80 to 90% winning ratio scalps. So again, 8 to 9 out of every 10 we're making money on. Bottom line, no one can ever do 100%. That's just the bottom line. Anyone who tells you they are making 100% of the trades, 100% of the profits, is lying to you. Don't believe it. Remember, you can get high 80, 90%, but there's always going to be a loser in there, and the key is the discipline to cut that loser and just walk away and then make money on the next 8 or 9 trades again. All right? Again, going into next week, here's your 60-minute. Let's just touch base. You can see the rally all the way from 101 up. Just watch this trend line, folks. Can't stress that enough. Earnings, for the most part, are now pretty much over. I mean, that's how simple it is. Your earnings, you're going to have a couple earnings here and there, but for the most part, earnings are over. Economic news next week, you'll have a little bit, but this last week was a bit of a heavier week. It'll be a little bit of a lighter week. The Fed meets on Tuesday. That's going to be key for the markets. I expect Monday the markets to remain very, very quiet unless we get some crazy news over the weekend. All right, folks. Again, come join the Research Center. Come join the chat. Remember, everything's included that's listed on the Research Center. The chat is a separate identity. And again, read up on it. I think it's key to read those each thing, what you get involved in when you get the Research Center, and decide if it's for you. Take care. I'm going to be making money next week. Let's hope you are too.